one of the best and one of the scoring chapter for you, and also one of the highest marks distributed chapter for you, which is your PGBP. So today we are going to revise the PGBP, but yes, as always, first we will quickly revise what things we have done in our last class. We have done two chapters in our last class, which one was your capital gains as well as your income from salary. So two big huge chapters were done in the last class. So the last class have become of 3 hours, right? Just a second. Yeah. So let's quickly revise. Let's make this Sunday morning make it worth by revising that two huge chapter of salary and capital gains, and then we'll quickly move to our next chapter. That is your, yes, the next chapter, that is your PGBP. Okay. So our today's agenda for this session is going to that we are going to complete our PGBP chapter in this complete 2-hour session. Okay. So let me go through the earlier two chapters of salary and capital gains. Let's see. Wait a minute. Let me adjust the color. I think there is a problem with the color here. Just give a minute, guys. My video is clear or not? Okay, let it be. I will do it later on. Okay. So guys, yesterday in the first chapter, salary chapter, we have started revision. We have seen that anything and everything received by employer to employee is fully taxable in the hands of employee. All the salary in the will be taxed in the hands of employee except two. First one was for your salary of your, what do we say, MP, MLAs, okay, that will be taxable in the income from other source. And second, salary of a partner from a partnership firm will be taxable under a PGBP, which you are going to see today. And all rest, all salary are going to be taxable under the head salary itself. Okay. Further, when we started with the salary, we have seen this complete big thing of all the calculation of your all the total salary which is there allowed there. Okay. First, with his basic salary, whatever is the basic salary you take for the absolute period which he's been employed here in the financial year. Then there is a DA, which can be certain times inside in terms, not in terms, on dependent on basic salary, whatever it is there, write it down first right now, right? Third, they have seen that there is commission also, whatever it is, fixed commission or turnover commission, whatever commission is there right now for this purpose, you write it down here. Thereafter, we have seen advance salary or arrears salary. If you receive any advance salary, we know that salary is taxable on due or received, whichever is earlier. So if there is any advance salary, even that is going to be taxable here itself. Okay. Arrears of salary, if any last earlier year's due salary is received now, okay, so that will also be taxable in this year. You will also get a rebate that we'll discuss at the end of with all that 6 steps, right? Further, thereafter, we have seen that there is any bonus will be taxable only on the received basis, because it may happen आपके employer बड़े बड़े वादे करके आपको bonus नहीं दे. And then we started the real chapter that started right from the gratuity. Just give me a second. Yeah. So the sunlight was coming on my face. So unwantedly, I was looking very much fair. Okay. Yes. So the next was your gratuity, from where the crux of chapter starts. In gratuity, pension and leave salary, all three places we have learned that if these three things are received during employment, it is fully taxable, whether it is government or non-government employee. If it is received at retirement, so for government employee, all these three things for government employees fully exempt. That's why our parents used to say right from our childhood why government job are so important, right? You must have understood it right now. Further, now let's talk about gratuity. When gratuity received by a non-government employee, we will make a two-part. One, he is covered in POGA, not covered in POGA. If covered in POGA, the exemption is least of the three. What is the least of the three? Actual received 20 lakhs or 15 by 26 into salary per month into number of completed year, excess of 6 months, you can round it off. Okay, now what will be salary per month here? Basic plus full DA. Whereas when a person is of non-POGA, in that case, the exemption would be least of the three, actual received 20 lakhs or 1 by 2 into average salary of last 10 months into, yes, number of completed years, no rounding off allowed. Please remember here salary is अपनी हमेशा वाली, which is what? Basic plus DA in terms only plus turnover वाला commission. No fixed commission, right? Then we have gone to the next part, that was your pension. In pension, we have learned that again, received during employment, fully taxable. At retirement, government employee fully exempt. Non-government employee, will ask him 2-3 questions. Are you covered in POGA? Are you getting gratuity? If you are getting gratuity, the exemption is 1/3 of total pension. Total pension. Okay, so make the total, okay, here. And if the gratuity is not received, in that case, the exemption is 1/2 of total pension. Also, please remember one interesting thing here is that if it is commuted and there is still some uncommuted part, that will still be being received for the further years, which will take you in calculation and you won't forget in your examination. Then we have gone to the next part, that was your leave salary. In leave salary, we have learned whatever again you received during employment, fully exempt, fully taxable. At the time of retirement, government employee fully exempt, non-government employee exemption is least of the following. But here, before starting this, we'll make 2 working note. One working note, leave credit, where maximum 30 days leave is allowed. Working note number 2 is going to be what, guys? Yes, working note number 2 is going to be your average salary again for last, average salary, that's it. Okay, now here also salary is going to be hamesha wali salary, and your exemptions are least of the 4. First, actual received. Second, 3 lakh rupees. Third, working note number 1 into 2, that is leave credit जो बच गई है आपके leave taken, total leave allowed minus total leave taken, multiply by your salary per month. And the fourth one is your 10 into multiply by your salary per month. Okay, then we go to your voluntary retirement compensation. In that case, we have seen the exemption is least of the 3. First is least of the 4. The first is actual receipt. Second is your 5 lakh rupees. Third is your number of years you have worked into 3 into salary per month. Balance number of months into salary per month. Then we have say retrenchment compensation, which is again 5 lakh and POGA wali conditions. Okay, in the meantime, guys, if you have any query in any particular part of the salary or capital gain, please let me know in your chat section, so I will take that as well. Then we have gone to the allowances. In allowances, we have seen simple 100, 200, 300 underground, 800. 100 is for school, 200 is for tribal, 300 is for hostel allowance, and 800 is for underground allowance per month. Don't forget that. And this is exemption amount. Please remember, in case of school and hostel allowances, please calculate this each children. Okay, for each children you calculate different. ऐसा नहीं है कि एक children का बच गया तो दूसरे children में use करेगी. No. Okay, then there is HRA. In that case, HRA received minus exemption is least of the 3. That is HRA received option 2, 40% or 50% of salary in case of your metro cities. And the third one is your rent paid minus 10% of your salary. What is salary here? Hamesha wali basic plus DA income plus turnover wala commission. Then we have seen this chart in which we have to specifically see which allowances are absolutely exempt. That is some high court allowances to the High Court and Supreme Court judges. Further allowances to the United Nations organization people. Also, you have to remember allowances given to any foreign diplomat of India, salary paid by Indian government is also exempt. Then we have came to the provident fund. We have seen there are 3 types of provident fund. First is statutory provident fund. Everything is exempt. Second is your recognized provident fund. In this case, whatever you pay, ignore it. Employer pay, exempt up to 12% of salary, hamesha wali. Interest 9.5%, maturity absolutely exempt. And then there is unrecognized provident fund. In that you ignore everything. At maturity you will make 4 parts. Aapka contribution, forget it. Or interest upon that, taking income from other source. Employer contribution and interest upon that you have to take in the head salary. This or bifurcation will be given by you in the question. Okay, and the similar kind of treatment will be given by unapproved superannuation fund. And for approved superannuation fund, employer contribution limit is 1,50,000. Okay, then we go further from here and we go to the next perquisite section. Perquisites are the benefit given by employer to employee but will be taxable under the head salary, because everything and anything received by employer to employee is taxable. So now here in the case of perquisite, the first perquisite we have seen for leave travel concession, which is for हम दो हमारे दो, but अगर surprise है तो 3 को मिल जाएगा, right? And here for air it is economy ticket, by train it is first class ticket, by bus approved then it is deluxe bus ticket, or else the same distance by the train. That would be going to be your exemption amount. So jitna mila hai minus exemption amount would be this. Further, there will be a medical facility. If employer provides you a medical facility and that facility is provided in government hospital, government approved hospital, or employer hospital, it is fully exempt. It is fully taxable. Further, so आपने आपके what do we say फैमिली डॉक्टर को दिखाया, बाजू वाले डॉक्टर को दिखाया, सामने वाले डॉक्टर को दिखाया, दिस ऑल आर टैक्सेबल. ओनली एग्जाम्प्ट इज गवर्नमेंट हॉस्पिटल, गवर्नमेंट अप्रूव्ड हॉस्पिटल एंड द एम्प्लॉयर्स हॉस्पिटल. Further, if you go to treatment for a foreign country and your employer reimburses you, in this case, the travel allowance will be given only if your total gross total income is less than 2 lakh rupees, and the balance two incomes and the expenditure for your living there and the treatment will be exempt up to the limit prescribed by the RBI. Further, if loan is given to you, so whatever is the concessional rate, the benefit received by you is going to be your perquisite. Gifts, if cash, fully taxable in kind, up to 5,000 taxable, above 5,000 fully, up to 5,000 exempt, above 5,000 fully taxable. That's what we are going to treat it, right? Next is your ESOP. So whatever is your fair market value minus exercise price is your benefit. This benefit will be also taxable under the head salary. And the next important thing which comes is use of your movable assets. In the case of use of movable asset, if the asset is owned by employer, the perquisite is flat 10%. If the asset is not owned by employer, it is a higher charges. And if the transfer of movable asset is there, in case of car, we'll take WDV depreciation 20%. In case of computer laptop, WDV depreciation 50%. In case of any other asset, SLM depreciation 10%. Also remember, if the employer has given you laptop, desktop, कितनी भी चीजें दी आपको कंप्यूटर के हिसाब से, so these are all exempt to use, but transfer किया है तो you will do WDV at 50% depreciation. Okay, and you'll subtract some consideration if they have charged you. Lunch facility up to 50 rupees is exempt, more than that is taxable. Rent free accommodation is given to you, so here the salary will be always used bad BCM. You remember bad BCM. B is for your basic salary, A for your all allowances, D for your dearness allowance, that is only terms wala, C for your complete commission, and B for bonus as well if it is received during time. So now here in the case of accommodation, if it is government employee, it's very simple, license fee. In case of other employee, it is going to be, if owned by employer, it is going to be a 7.5, 10 or 15% of salary depending upon the population, which is less than 10 lakh to 25 lakh and above. Further, the last one is for your, if the employer has hired the house and given it to you, to higher charges or 15% of salary, whichever is lower will be your perquisite. If also furniture is provided, so please add 10% separate for the cost of the furniture or the higher charges paid by the employer. Further, hotel accommodation is available, so in case of transfer up to 15 days is exempt, above that is given, then it's 24% of salary or your hotel charges, whichever are lower will be your perquisite. Now we come to a very important and very interesting perquisite, that is your car facility. If the car facility is given by employer and you use it completely for personal purpose, so everything is your perquisite, 10% of the cost of the car plus maintenance expenditure plus driver expenditure. But the car is completely used for official purpose, there is no perquisite because आपने पूरा काम office का ही काम किया है. The interesting thing comes into place when the car is partly used for office and partly used for personal purpose. Here what you are going to do is that आप इसके चार केस करोगे. गाड़ी किसकी है? First you will say our car expenditure also are. There is no perquisite यार. Our car expenditure provided by employer. We'll ask him write down how much expenditure you paid minus 1800 or 2400. Further, if the car is of employer, expenditure is also by employer, then in that case 1800, 2400. Car is of employer, expenditure is of employee. In that case, is 600 and 900. All of this value would be increased by 900 per month. In case of chauffeur, a driver is also provided. Okay, higher limit if the car is of above 600 cc, and lower limit if the car is of 600 or lower cc. Okay. Thereafter, further we have seen education facility for employer is absolutely exempt. For the children of employers up to 1000 exempt, and any other perquisite will be fully taxable. That you need to remember. In tax on non-monetary perquisite will be exempt. Telephone charges would be exempt. Further, there will be 3 deduction which will be allowed for you in your salary calculation under section 16. The first is your professional tax. So whatever employer reimburses you for the professional tax, add it in the salary, and below how much you pay, minus it. Okay, so employer pays 2000, add it upside, you pay 2500, you subtract 2500 below it. So both the treatment has to be there, then only you will get a marks. You do not need to give a net treatment. add it upside in the calculation and subtract it from the deduction. The next deduction which you can get is entertainment allowance, but only by the government employee. The deduction would be least of the three. One is your 20% of only basic salary, two actual receipt, or 5,000, whichever is lower. 5,000 is for the complete year. And third and the last deduction is allowed for everyone whoever is receiving salary, which is 50,000 rupees for the complete year. Okay. And then the last thing which was there of your salary chapter, which was your areas of your salary. In that we have learned that whatever areas last year salaries you are got it here, so you will get a rebate under section 89, which says that tax, if you would have got the salary in that respective year and now difference would get as a rebate. How you will calculate this? Current year including arrears tax, current year excluding arrears tax, and you'll write difference outside. Last year including arrears tax and last year excluding arrears tax rate would be given to you for the last year. You have to just remember for the current year, which you would have definitely remember, and different outside, and the difference of this both will give you the rebate under section 89. Okay, with this we finish our salary chapter in right 12 minutes. Okay, hopefully it is nice and quick revision for you guys. Please use this earlier revisions of our each session for your daily revision purpose whenever you're traveling or anywhere. That is going to be a lot helpful for you. Let me know if you have any queries for your salary chapter. If not, give me next 10 minutes. I will quickly take capital gain as well, and then we'll start with the PGBP. Yes, guys, come on, say me. I feel it's a morning time. I have to be there at your home to shake you up. Yes, guys, come on, please message in your live chat. All clear, right? Anything you want, right? Superb, sir. Amazing, sir. We are going good, sir. We know everything, sir. You just keep on speaking, sir. Say anything, but say at least anything. क्यों सुबह सुबह सोए हो मेरा मोबाइल का what we say मेरा लेक्चर लगा कर. Okay, that's good. Please keep on interacting, guys, so I do understand this. Okay, you would be definitely on laptop night, so simple for you to chat with laptop, isn't it? Yes. So the next is your capital gains chapter. In capital gains, first thing we have learned that whenever there is a transfer of a capital asset, the gain which arises will be taxable in the year of transfer. Okay. Now first we have to understand what is capital asset. So all the assets are capital asset, but excluding what? Stock in trade, excluding person movable property. But in that you will include JDP SAO into your definition of capital gain. What is JDP SAO? Is your jewelry, drawing, painting, sculpture, archaeological collection, and any other work of art. Further, you will also include any rural agriculture land, and you will include your gold denominated bonds. What is rural agriculture land? So if a city has a population of 10,000, so the boundaries of the land and inside is urban, outside is rural. If the city's population is about 10,000 up to 1 lakh, go 2 kilometers from the boundary. About 1 lakh to 10 lakh, go 6 kilometers from the boundary. About 10 lakhs, go 8 kilometers from the boundary. Inside land is urban, outside land is rural. Okay. Further, transfer is what? Any kind of transfer. It can be sale, exchange, barter, relinquishment, extinguishment, destruction of asset. It is your conversion of asset. All this will be known as transfer of asset. So whenever a transfer of asset happens, in that case, a capital gain will be taxable in the year of the transfer, except that 4 cases which we'll see later on. Further, the capital gain is divided into two parts. One is short-term capital gain, long-term capital gain. For the first block, which is for your equity share, okay, which is for your equity share units of equity oriented and your business trust and ZCB. The limit is of 1 year. Next, immovable property and unlisted share, the limit is of 2 years, and last the all other shares, the all other assets, the limit is of 3 years. So less than 3 would be short term, more than 3 would be the long term. Why we are dividing this? Because the tax rate are separate for all of them. Okay, further we will see how we are going to calculate this. The format for the calculation of capital gain: first you will write full value of consideration minus all transfer expenditure, but please remember, in case of shares, STT won't be as a transfer expenditure. In PGBP it is, here it is not. Then comes your net consideration, and from net consideration, what do you will subtract two things. One is cost of acquisition and cost of improvement, and that will give you capital gains. Cost of acquisition and improvement will be indexed if it is a long-term capital gain. Further, how you will be getting, how will be indexing this? So you will multiply by the CI of the year of transfer upon CI of the year in the case of acquisition or improvement, whichever it is. Okay, the CI for 22-23 is 331, which you maybe need to remember. Any improvement done before 1/4/2001 would be ignored, and there are and any asset acquired before that, you will take fair market value as on 1/4/2001. Further, we have seen one of the beneficial treatment for foreign assessees is that if they have any gain, and there is also gain because of foreign currency fluctuation, that foreign currency fluctuation gain will be ignored. If there is loss due to foreign currency fluctuation, that will be allowed them to set off against all the other capital gains. There, if there is any self-generated asset, any intangible asset, the trade, royalty, patent, copyright, whatever is self-generated, the cost would be nil. Purchase, the cost would be the purchase cost. Further, if there is any bonus share which are acquired before 1/4/2001, that bonus share cost of acquisition would be fair market value as on 1/4/2001. But if it is acquired after 1/4/2001, the cost of acquisition would be nil. If there is any right share and you renounce this right share, whatever amount you renounce, this will be your capital gain. If there is any right share and you purchase this right share, also you purchase the renouncement right from someone else, the cost of acquisition would be going to be the total one. Okay, thereafter comes into your place is your exemptions. That exemptions of the condition that your capital gain is taxable in the year of transfer. There are 4 exemptions. First exemption is when your capital asset is converted into stock in trade. The conversion year is your transfer year, but taxable year is when you actually sell the stock. Second thing was your claim received for your destruction of any asset. In that case, the conversion year is a destruction of asset, but when you receive the claim, that is your taxable year. The third one is your compulsory acquisition of land. The compulsory acquisition year is your transfer year, but taxable year would be what? It would be your when you receive your initial compensation. If you receive any enhanced compensation, you just subtract the litigation charges. If you receive interim compensation, please wait for the final compensation. Fourth and the last one was when you are there in a joint development agreement, when you give your land in the possession of someone else to do a construction, that is a transfer year. And when land gets completed and you get a completion certificate, that is what? That is your completion year. Everyone clear? So this is all your 4 cases where when capital gain will be taxable in some else year and transfer is some else year. Please remember here, whenever you are multiplying, whenever you are indexing, so please multiply with the CI of the year of transfer, not CI of your current year. Okay, you will please remember this. It's a special cases. Okay. Thereafter, further going, we have seen section 50C, which talks about stamp duty value. So you will, from your consideration, you will go up to 110%. If inside that your stamp duty value is there, that's great. If above that your stamp duty value is there, so your stamp duty value itself will become your full value of consideration. You can, if you feel that stamp duty value is too much high, you can ask your assessing officer to refer the case to valuation officer. If valuation officer increases it, just ignore him. If valuation officer decreases it, accept the same. Then going further, we have seen about slump sale. In slump sale, we have seen that whenever you sell the complete big bunch of all assets, land, building, machinery, raw material, everything in a slump sale. In this case, whatever amount you sell, that is your full value of consideration. Subtract, you will do transfer expenditure, that will come your net consideration, and you will subtract your net worth, that is nothing but your cost of acquisition. If your net worth is negative, take it as nil. If the net worth is positive, that's great enough. How we will calculate net worth is all the assets and liability on the book value, depreciable asset on the book value, asset minus liability will give you net worth. Please ignore any revaluation which is done in this case. Okay, a good question. This question generally comes into examination, which even comes in CA final as well. So this is a very scoring question. I have suggested you to do this question at your homework. Okay, and then there are some 16 transactions which are not regarded as transfer, and hence there will be no capital gain on this transaction. What were these transactions? The first one was when HUF member get a assets from HUF. Second one was when a partner get assets from a partnership firm. No, sorry. Second one was a gift, will, irrevocable trust. Third one was when the assets are being transferred from amalgamated company to in the case of amalgamation, but the resulting company should be Indian company. The fourth one and fifth one was holding subsidiary. If there is 100% holding subsidiary relation and the receiving company is Indian company. Demerged company, resulting company giving asset to resulting company. If it is an Indian company, all the shareholders for amalgamated as well as demerged companies. Then there was when you transfer any asset to art museum or anyone, even that is not regarded as transfer. Further, we have seen in that case there were for two provision were there for non-resident, one for rupee denominated bond and another one was for your security, government securities transfer from one non-resident to another non-resident, no transfer, no capital gain. Further, gold deposit bonds, if you transfer that also at maturity, there is no transfer, no capital gain. And there was one last thing, that was in the case of reverse mortgage. If you transfer the asset, even that will be no transfer, no capital gain. Also, I'm so sorry, I just meant to take this last part in this one more, no transfer, no capital gain. When the mutual funds gets grouped, where gets combined by another mutual fund. So if they are of same kind, so if dividend gets combined with dividend, it is not dividend. When equity mutual fund gets combined with equity, it's no transfer. When debt mutual fund combined with debt, no transfer. But if equity combines with debt, then there is going to be the capital gain. So if the plan are different, dividend plan, equity plan, or whatever plan are fine, but equity and dividend and debt, they should not combine with each other. If they combine with each other, then in that case there will be transfer and there will be also capital gains. Then we have come towards the next part, which was all of your exemptions, which came to section 54, 54B, 54D, and 54 EC. For fee, 54B was for only of your, what we say. Just a minute. Let me see, the diagram is available. Yeah, it's available. Yeah. Just a minute. No, it's not there. Anyways, so first is for your RHP to RHP 1 year before, 2 year after construction up to 3 years. Second is for your agriculture land to agriculture land. In that case, only sale of urban agriculture land, because rural agriculture land is not capital asset itself. Third one is when you are compulsory acquisition of land and building of your factory, so you can acquire new land and building. And the fourth one is your whenever you sell your RHP and you invest and sell any land and building, not only RHP, any land and building, and you invest into what? You invest into the bonds of NHAI, REC, Power Finance Corporation, or your Rail Corporation. In this case, you will have maximum deduction of 50 lakhs, whereas 3 case the deduction would be cost of new asset or the capital gain, whichever is lower. Okay, and the last one was 54F, when you sell any long-term capital asset and you invest into your RHP, including new, you should have only 2 RHP. The deduction is here proportionate, that is your capital gain into your new investment upon your net consideration. Okay, then comes your last part of the chapter, which is your taxation. In case of taxation, we have seen that normally all capital gain will be taxed at 20%. Short-term capital gain will be added to your income tax slab. For equity share, equity oriented units and units of business trust, the short-term capital gain tax rate is 15%, and long-term capital rate is above 1 lakh 10%. Up to 1 lakh there is no capital gain. Okay, so with this we finish this beautiful chapter as well. So guys, it's 30 minutes and we have finished 2 huge chapters. Okay, please let me know your comment upon this. Is everything clear? Are you fine? Is everything going good? How's the revision? How's this rapid revision? Shall I spend this initial time in the rapid revision or not? Let me know certain things. Talk with me. I don't know why you are so why you're not so much inclusive while talking. Why? Come on, speak something. Okay, just give me a 2 minutes break and then we'll start with our next chapter of PGBP. That's what our target is there of today. In the meantime, yes, you can definitely let me know how's it going, and see you surely do should we do this rapid revision or not. Don't just write yes sir. I won't understand what is you are saying by yes sir, because I asked you so many questions. Okay. Okay. Yes. Shiraksha and Shika, that's perfect thing. Now, what I'm going to do is pay attention, everyone. This rapid revision classes which I had. Okay. What I will do this. I will just cut this portion of each chapter. Okay, I will just download this videos. I will cut the portion of each chapter, and chapter wise I will give this with video if you want with video, or only audio if you want only audio. Okay, I feel it's better if I give it with video as well. That's great. So I will cut this each chapter wise, and I will give this I'll give this to you. So please just go for my Telegram channel. Unfortunately, I'm myself not able to access it because of my number is that giving a problem. But yes, just a week or so, and I will give you this for your what is for your revision. So just go through my Telegram channel, and if still say in week's time I haven't given the link of all these videos for you on the Telegram channel, do one thing, just message me on the WhatsApp. So I will just create all the links one message for you, and I will send it to you so you can circulate among you, or I will just keep into my WhatsApp profile itself as its business account. I can put it there so you can quickly access from there. You guys would be already having my WhatsApp number where you can ask me your different queries as well. That's 7293292291, because there are many old batch students also, they are also asking me for the same right from your ODP only. So even they want this. So just go for my Telegram channel. The Telegram channel is with the same name, CA Sumeet Maaru. Hopefully you remember my name till now. Okay, so I will put it there as well. So you just join it. So once I put there all the links, it will be available at your touch. I hope you all guys would be having telegrams with you, right? If not, then you can also further transfer the message in WhatsApp, and you can share in your internal groups as well. So what will happen, this rapid revision is available with you, and please make maximum use of this rapid revision when you're traveling at all such places. It's a lot of use. That's why I used to give for the all last batches as well, and they know the very much use of this. You can ask your seniors, and you can take help of them as well. Okay, so let's come back and let's learn our next chapter, which is your PGBP, profits and gains from business and profession. Now this is the most interesting and the most simplest chapter, because यहाँ पे आपको chapter में सिर्फ plus minus करना है, that's it. Okay, so now what happens in this chapter? This chapter says that whatever profit you get from your PGBP, as per accounts it is, right? Whatever profit you are getting, it is as per accounts. So now from this, if that is not allowed in tax, if any expenditure is not allowed in tax, it disallowed as per tax, please add to your profit, increase your profits, because you are already debited in this expenditure. Further, if the expenditure is extra allowed or already allowed and you haven't taken into your accounts, please subtract from your profit. So from the balance profit, you will get the taxable amount of what? You will get a taxable amount of your, what do we say, income tax PGBP. So we simply use accounts profit, and we apply all the provisions of your income tax, and we calculate the profit as per income tax, because that is going to be used for paying the taxes. So disallowed expenditure is already put into P&L. So we are removing the effect. So when we are removing the effect of expenditure, we have to add into the profit. And when you are putting the effect of expenditure, we will subtract from the profit. Okay. And that will give you a final profit as per PGBP, upon which you are going to pay the tax. So guys, now here in PGBP, please always remember, in your 5 heads of income, in all of your 5 heads of income, whenever any income is earned, first you will ask PGBP. Is this income PGBP? Yes, it will be taxable in PGBP. If no, then it will be capital gain or salary. Obviously, salary will be obvious salary, or house property, or income from other source. So always remember, the first door is for PGBP. So anything, if it becomes your business, your income will be taxable there. Okay. Now here, please remember, in when we are talking about business, if any gift perquisite is also received because of the business relationship, even that will be taxable under the head PGBP. Please remember this. And a gift or perquisite received for PGBP, it won't go in IOS. It will be taxable in PGBP, because the relation is how? The relation is business relation. Similarly, if any gift you receive in salary, it won't go in IOS. It is taxable in salary only. If you remember, if it is cash, fully taxable. If it is kind, up to 5,000 is the limit, right? Thereafter, further any non-compete fees, okay, and once your assets is converted into your stock in trade and that is sold further, the balance income will also business income. In case of agriculture income also, we have seen when you take your goods and you further process it, after sales whatever you earn, even that will be your business income. And already you have seen some fixed percentage for tea, coffee, rubber, and the coffee only grown and cured as well, and that also there is some part of business income there. If you have received any incentives on your export, that incentive will be also taxable in the PGBP. So there can be an incentive for your exports, like profit on sale of import entitlement license. What is this? So say government has given me some entitlement that I can import this type of goods, and I have sold this license to someone else. That is fully taxable amount I am receiving. Cash compensatory support as duty drawback. So if I'm getting any custom duty drawback, I'm getting this duty return, even that is fully taxable. Profit on sale of duty entitlement passbook. So rather than giving any right to someone, I have given right only for a particular time to someone. Like I have given a right of duty entitlement passbook to someone. I have given right someone to use my duty returns. Okay, in that case, whatever amount I'm selling this, that will be also fully taxable here in BGBP. Accordingly, if you also receive any compensation due to your business, that will be also taxable in business. So in short, I will say, if anything is related to your business, that is going to be taxable in PGBP. Okay. Further, the next is your speculation business. So government has said that whenever income tax authority has said that whenever you have any sale, any see what language they have used here. A transaction which contract for purchase or sale of any commodity includes stock or share is periodically ultimately settled otherwise than by actual delivery. So whenever your contract is settled otherwise by actual delivery, means what happens, you haven't actually purchased it. You just set the transaction monetary. It will be known as speculation transaction. For example, say I have contracted to you to purchase 100 kg of tomatoes when the price were 80. Now the price are 100. So I am not actually purchasing the tomato. I am just giving you the price difference of 20 rupees. Okay. So there is no actual delivery of goods. Here there is no actual delivery of goods. The only thing happened was your what? Just a minute. Yeah, the only thing happened was your net transaction set off. So in such cases, it is fully taxable and it is speculation business income. Now what happens? Please remember, in business income in PGBP we keep three incomes separate. One speculation business income is kept separate, another 34 AD business income is kept separate, and the balance business income comes here. Don't let mix all these three incomes, okay? Keep them separate. Further, but government has said that four such contracts are going to be never be known as your PGBP. The four contracts are: first, hedging contract. Hedging contract is what? In simple, I am worried about in future prices going up. So right now only I am entering into some contract to save that transaction. That is your hedging contract. Next is hedging contract in case of stock and shares. Even that is not speculation. Forward contract. I have done contract from with you from today only to purchase something after 6 months or 3 months or 1 month or 1 year. And last one is trading in derivatives through recognized stock exchange. These four things you have to remember as it is, guys, because these four things, even though not settled ultimately with actual delivery, these are not going to be understood as your speculation transaction. Other than that, if there is any transaction, any contract happening without the actual delivery, it is going to be a speculation. Okay, just go through with all these 4 points very nicely. Try to remember them, because this is one of the interesting and very much favorite question of examiner for MCQ. Okay, hopefully you know in detail the meaning of all this contract. Okay, that definitely I must have taken into your regular class, so I'm just taking the headlines here. So other than this four, if there is no settlement of actual by actual delivery, it is a speculation contract. For this four, these are specifically said these are not a speculation contract. Okay, why we are doing this difference of speculation and non-speculation? Because the profit from speculation has to be keep separate, and the profit of non-speculation has to be kept separate. Okay, further now we'll learn about different deductions and how the deductions are allowed. Why we are doing in going in this way, guys? Because see, the PGBP main intention is that you should have all knowledge what is allowed as per income tax and what is not allowed as per income tax. That's what we are to focus upon. Okay, so now we are going to see what things are just what things are allowed and what things are not allowed. So at the end, when we make a PGBP question, we can simply apply all these different provisions there. The first thing we are talking about the rent, rates and taxes here. Okay, so please remember here, in the case of rent, rates and taxes of your building, so if you are owner of a building, so obviously rent is not allowed, as I myself am the owner of the building. Rates and taxes allowed, insurance allowed, revenue repair allowed. If there is any capital repair, just ignore it. If I am a tenant, in that case all these things are allowed, even revenue repair is allowed. If capital repair are done, please capitalize them. Okay, other than that all expenditure allowed. Same is in case of plant and machinery as well. If it is owned, then obviously rent is not allowed, all expenditure are allowed. If it is not owned, in that case even rent is allowed and all expenditure are allowed. If these assets have been used for business purpose only, okay, and capital repairs are there, then please capitalize the same and claim depreciation. If any asset is partly used for business and partly profession and partly personal use, please proportionate them. So in future, when you'll go for your articleship, this chapter is going to be one of the very much important for you to understand, because this is what you are going to practically apply in your audits. Okay. Next, let's start with the very interesting thing of this chapter, a very important part of this chapter, that is your depreciation. So here we simply see you generally follow WDV method only. Okay, an option of SLM is given only and only to the power units. So an option is given to them. They can either go for power unit or sorry. They can either go for SLM or WDV. But all other than the power units have to compulsorily go for WDV, return down value method only. Okay, now here we follow this method in the way of same rate, same class. So we make different blocks. Each block will comprise of a same rate and same class of an asset. Okay, so guys, here see, if the SSC is in the that we'll see later on, we already seen this. Yeah, so what are the different blocks of asset, how they are what are different classes of asset? The first class of asset is your building, another is your furniture, another is your plant and machinery, and there is intangible. So these four are different classes of an asset. Each class of asset will be respectively be made in a different block, and in that each class as well, if there are different rates, the separate blocks will be made. So building, furniture, intangible assets and plant and machinery. Okay, this is going to be the balance block. So if anything is not here, here or here will come here, just like books. Okay, so these are the different rates. Just go through with all these rates. You must be already knowing. Building, if it is commercial building, it is 10%, residential building 5%, if it is temporary structure 40%, furniture and fitting 10%, intangible asset 25%, plant and machinery generally 15%, but if you're in business in the higher, then it is in 30%, ships, aircraft 20%, aircraft double 40%, computer laptop 40%, books, all books nowadays 40%. Just go through with this range, guys. You remember all of them? Okay. Further, remember, if there is a EPX or mobile phone, please don't charge them 40% depreciation of computer laptop. Put them in plant and machinery 15% only. That's the balance block, right? Depreciation is allowed for all the unit, even if it is of 500 rupees as well. If it is a capital expenditure, capitalize it and depreciate it. For computer, laptop, the depreciation rate is 40%. For computer accessories as well, the rate would be 40%. Remember this. Now, how we are going to solve the question of depreciation? So, say this is going to be the format of for question of your depreciation. First, you can write your opening WDV of the block. So, please remember, for each block there will be separate column made. So, say for plant and machinery 15%, plant and machinery 40%, intangible assets. For each class and same rate, the different block would be there. So here, once you write the opening block, you can write down the additions. Addition write down in the way put to use more than 180, less than 180, or not put to use. Okay, because that's where the depreciation rate also changes. Less money payable if you have sold any asset, the sale price of the asset. Less WDV of the assets transferred in some slump sale if any asset has been gone into slump sale, and then you'll write the WDV of your asset for depreciation, and then you'll calculate the depreciation and the closing value. Now please remember, whenever an asset is used for more than 180 days during a previous year, it would be depreciated for the complete rate. If an asset used for less than 180 days, it would be depreciated for half rate. Everything clear? If an asset is added, like it has been brought into the accounts into your factory but not put to use, in that case no depreciation. Everyone clear? So what happens, so when you are doing addition here itself you write it separately, so automatically when you are calculating depreciation, you can refer this and you can calculate depreciation accordingly and appropriately. Okay, now here one interesting thing is there. See what this line says. Let me see that line. Yeah, try to understand this. Say, try to understand this line. Try to understand the meaning of this line. Oh, sorry, not that. That's very simple. Try to understand this one line. It's very interesting. Read the line carefully and try to understand the meaning of this, guys. Now, what this line says. This line says that, pay attention everyone, a very interesting thing. If you know, that's great. If you don't know, pay attention now here. If I acquired an asset in previous year, say 22, 22, 23. Okay, and I put to use asset in the same year for more than 180 days. So full depreciation, we know this. We put to use asset in the same year for less than 180 days, we know half depreciation. If not put to use, we know no depreciation. We know this, right? So now the asset which was acquired in 22, 23 but not put to use, say put to use into next year. Next year, if it is put to use even for one single day, it is put to use on 31st of March, still full depreciation, because this line says that the half depreciation is allowed to an asset in the year when it is acquired and put to use in the same year for less than 180 days. If it is acquired in some else year and put to use in some else year, in that case, in the other year, it is going to be fully depreciated. It is going to be fully, what we say, it is going to be fully depreciated. Yes, correct. Even for a single day. Sir, it is not even put to use in 23, 24. In 24, 25, it was put to use. So no depreciation here. and in 24-25 full depreciation. Everyone say me, you have understood this provision, or shall I give you one more example? Come on, quickly say me. The provision, what this says is that when an asset is acquired and put to use in the same year, that year we will take a half depreciation. If it is put to use in some else year, in that case what? In that case, we will take complete depreciation, even for single day. Okay, that's very good. Very nice. So we'll see if the time allows, we'll go through this question as well at the end of the class. Okay, yes, very good. Further, guys, if there is any demerger, succession, amalgamation in between, so we will divide this depreciation into two parts upon the number of days. So, our number of days it is in the old company, the depreciation will be given to the old company. Number of days it is in the new company, depreciation will be given to the new company. You everyone must have done the question in the study material of Sai and Shirdi Limited, right? That is a perfect example of solving this question. Now, the next thing is about your additional depreciation. So additional depreciation is allowed 20% for all manufacturing business or generation and transmission or distribution of power. So an additional depreciation will be given on the only additional asset during the year of 20%. Further, if this addition is in the state of but why, what is but why? That is your Bihar, Andhra Pradesh, Telangana, and West Bengal. The additional depreciation is rose to 35%. Also remember, if the asset is being used for less than 1 days in current financial year, and in that case, half additional depreciation will be allowed here and half in the next year. Here comes one of the general adjustment wala question by institute, which they say that half depreciation was taken in the last year. Now what to do? So please remember to take the half balance additional depreciation in the current year. Okay, this is generally a question given by institute, even given in your study material as well. Please remember this additional depreciation is allowed only and only to the new plant and machinery. It doesn't include second-hand plant and machinery. Plant and machinery installed in office or residential premises. No, it should be in factory only, not for ships, aircraft, and transport vehicles, and or not on that plant and machinery on which already somewhere 100% deduction is claimed. Okay, so rest on all these different things, the deduction would be allowed to you. Additional depreciation. Okay, so please remember it is only on the additions at rate 20%, but it is Bihar, Andhra Pradesh, Telangana, West Bengal. But why the rate is at the rate 35%? Okay, now what your cost of asset is going to include? So see, it is going to include installation expenditure, cost of asset, obviously all transport expenditure, trial run expenditure as well. From this trial run, if you earn some revenue, that has to be subtracted here only of trial run. Taxes and duties, if ITC is not available, ITC you must very much nicely be aware about now. Interest on loan for the acquisition of asset as well should be capitalized up to the asset is put to use. Okay, and then if you receive any subsidy, that has to be subtracted, and then the balance amount, that is will be capitalized. Just go through it once. Everyone clear? Now further, actual cost in specific cases. So if the asset is previously used for scientific research and now brought into the regular business, actual cost is nil because you are already taken 100% reduction under scientific research. Further, stock converted into capital asset and business PGBP. So fair market value is going to be your cost of acquisition. This is already we have learned in your capital gains. When your capital asset is converted into stock in trade, the fair market value becomes your cost of acquisition. Gift will, it will cost to the previous owners. Asset acquiring intention to claim higher depreciation. Joint commissioner can take particular decision how to allow this. Reacquisition of assets sold So if you sell any asset and you reacquire it, in that case the cost of acquisition would be lower of WDV at the time of sell or the reacquisition cost. This is a very important and interesting part. If someone tries to take claim more depreciation, this can be helpful. So when you sold the asset, what was the WDV? When you reacquire the asset, what's the price? Whichever will be lower, that will be your cost of acquisition. Sometimes this comes under MCQ. Further, asset purchased and leased back, WDV to the previous owners. Okay, and if it is 100% subsidiary and they transfer the asset cost to the transferor company, amalgamation transfer to the amalgamating company, demerge company, cost to demerge. So whatever the cost was to the old company, that will become cost to the new company as well. Okay, just a second. Yeah, if you receive any grant subsidy, that has to be reduced from the amount. Okay, so these are certain important things, and if it is already claimed under 35 AD, the cost would be nil here. Okay, next is for power generating undertaking. So if any entity is a power generating undertaking, in that case, they have an option. They can go either WDV or SLM method. Okay, if WDV method, then they are going to use the block of asset that is same class, same date of asset. But if they come under SLM method, then in that case they have to individually depreciate all the assets. Okay, depending upon the life of the assets. Now, interesting thing come into picture is that if they sell this asset during the previous year, which has been depreciated on SLM method, so see what will happen here. Pay attention in this example. Say actual cost purchase was of 100, we have depreciated it for 2 years, and now the WDV is 80. The WDV is 80, and if you sell this asset for 72, so there is in fact a loss of 8 rupees. Okay, so this 8 has to be taken as a terminal depreciation. See, now you purchase it for 100, now the WDV is 80, you are selling it for 72. So there is in fact loss. It is more less than what it's in fact less than your WDV. So this loss has to be treated as terminal depreciation. So depreciate the balance amount and bring it to the current value. Next, if say rather than 80 you are selling it for 89 above WDV. So how much will be above WDV? That will be taken as balancing charge as PGBP income. Okay, and say if it is sold for 117, so up to the cost would be balancing charge, PGBP income, and balance would be taxable under the capital gain. So I'll just give an example here. This is important by as this is also one of the interesting thing to ask in MCQ questions. Pay attention here. See, the cost was 100, right? The WDV was 80. If you sell below this, it is going to be known as terminal depreciation. Please remember the terminologies. That is going to be debited to the P&L. If you sell above this up to here, it will be known as balancing charge. Okay, and this will be, wait a minute, let me write down it nicely so you can copy it down as well. So it is above WDV, so you will credit to P&L. And if it is above this, so इतना अमाउंट तो आपका बैलेंसिंग चार्ज में जाएगा, और ये जो भी अबाव कॉस्ट है इट विल गो अंडर योर कैपिटल गेन्स. Understood everyone? Just copy it down if you want. Sell of asset by what we share SLM following method. Just copy it down if you want. That is for power companies. I will just fill my bottle and back in a minute or so. Meantime, if you have any query, please ask me. Okay. Similarly, guys, now here the next capital gain calculation we will see in terms of depreciable assets for WDV method. So here the capital gain will be calculated only in certain cases. What are the certain cases? Pay attention. When case 1, see here example only, example we'll go through. Say opening block of WDV was 6 lakhs and there were 5 assets. We have added 2 more into this. Now excuse me, we have total 7 assets at 8 lakhs and we have sold this for 5,20,000, all 7 assets. So now if in the block there is no more assets, in that case we will calculate the depreciation, capital gain. So if block ceases to exist, then we will calculate the capital gain. Next method. Here in the another example you can see again the asset are ceasing to exist, but this time you have sold this for more than WDV. So in this case there is capital gain, and this case there is capital loss. Got it? So see, one case, if there is no asset, calculate capital gain. There is WDV but no asset, capital gain would be there. No WDV, no asset, capital loss would be there. WDV is there, but that's the gun. Okay. Further. Next case is WDV is not there, but asset is there. Still calculate capital gain. Means what? same, I had 5 assets at 5 lakh rupees. I sold 3 of them at 8 lakh rupees. So WDV block ceases to exist again. If I have both WDV and both asset, then simply calculate depreciation. There is no capital gain. Got it? Because capital gain is calculated only the case where the block ceases to exist, either WDV or physically. So you can see in another example, see here. In this example, we had 5 assets, we added 2. Now we sold 4 assets for 9,10,000. So there is no WDV now with us. We do have assets with us. We have 3 assets with us, but there is no WDV here. So in this case, also capital gain will be there. And when there will be assets, then will be WDV as well. No capital gain has to be calculated and depreciate the assets. So you can just quickly note down this as calculation of capital gain in case of depreciable assets. If you already have, great. If you don't have, you can just note it down or just take a screenshot. I don't know why it is so unclear today. Okay, done everyone? Everyone clear? Any queries so far? Okay. Now, if you have taken any loan, in that case, if this loan is taken for new company or new business, that is going to be, if it is for up to the date of production, you will add to the actual cost of asset. After that, you will add to as a revenue expenditure in P&L. So for asset as well, up to you put to use the asset, the interest on this loan will be added to the cost of asset. After that, it will be debited to the P&L. Okay. Further, if any asset is used for partly personal and partly business use, in that case, what will happen with depreciation? So we will also depreciate it only for the purpose of depreciate it proportionately. So see, an example is given here. A car is 60% used for business and 40% used for personal purpose. So see here, total depreciation comes to 60,000, but we will allow only the business wala depreciation. Personal Another one, you are doing the research ongoing parallelly with a business. So if you are doing research before starting a business, maximum 3 years before commencement of business, research expenditure is allowed to you. Okay. Further, in that also, in revenue expenditure, only salary excluding POX is allowed to you. No other revenue expenditure is allowed to you. In capital expenditure, excluding land, all other expenditure is allowed to you. So if I am doing any research before starting of any business, up to 3 years only expenditure is allowed to me. Further, in revenue only salary without POX, and in capital other than land everything is allowed. Everything clear? Next, when I'm doing business all together with research all together with the business in-house again. Now here this have been changed. In these cases, in this all the cases, the expenditure is allowed for revenue 100% and for capital other than land 100%. So all revenue expenditure are allowed. If you are doing research with ongoing business, 100% expenditure are allowed, and for revenue, and 100% for capital as well, excluding land. Everything clear? So this were earlier 150, now they are restricted to 100 only. And then if I'm donating it to someone, someone are there, just pay attention here, just a second. If you are donating it to approved, it should be approved. Please remember, approved research institute college or university, then again it is 100% allowed. Okay, if it is donated to IIT National Laboratory or any IIT institute, 100% only allowed. Approved Indian company as well. Sometimes you forget this condition. To an approved Indian company also you can donate. That for scientific research only, there also you will get the 100% deduction here. Everyone clear? So for donation of IIT, National Laboratory, approved university, college, institute, approved company, 100% deduction is allowed. Please remember, if I donate them today and say 2 days, 3 days later, the approval removed, no problem, you will get the deduction. Okay? Any queries in the scientific research deduction? Earlier it used to be more complex, but now it is more simple because they have reduced this 1%, 150% to 100% only. So it's very simple. For scientific research, they have made two parts. One, if you are doing in-house research. Another, if you are donating it to someone. Donating to someone, it is approved research institute, college, university, or IIT, National Laboratory, or approved company, 100% of the deduction. Okay, and if you are doing in-house, if you are doing before starting of the business, up to 3-year revenue only, salary and capital other than land. If you are doing parallelly with business, all revenue are allowed, and except land, all expenditure are allowed. Everyone clear? Further, the next part of this, now once you take deduction here in your scientific research, if you bring this asset into some other business of yours, the cost of acquisition would be nil, as you have already taken all the deduction here in scientific research. Okay, next has been reduced. Next and very important things come under section 35, you specified business. So as I've said you before only, that your profits of business will be kept in 3 different accounts. One of speculation, another of specified, and third one is of your normal business. Why this? You'll understand this in your state of and carry forward chapter. Okay. So there are 14 such businesses which are specified. What happens with specified business is that whatever expenditure even on capital asset do incur, everything is 100% allowed in the first year itself. There is no need of capitalizing them and claiming depreciation. Why government has done this? So as to promote this particular businesses. Government has taken these steps. Okay. So which are these 14 businesses? So I just generally take a small story in this, all 14 businesses gets covered. So say there is an industrial park which has a cold chain, which has which has a cold chain, which has warehouse for agriculture product, a fertilizer factory. From this, there is a iron ore pipeline goes to another country. Okay, and the employees of all this lives here in a slum here. Now, on one particular day, a bee attack has been done. You can see honeybees on this slum. So all the people have been admitted into hospital. As there are so many people, it is 100+ beds hospital, and the balance people have been typically have been taken into 2-star plus hotels for temporary stay. Okay, so this is a small story in which maximum business gets covered. See here, setting up and warehousing of cold chain facility, which is covered here. Okay, warehousing for agriculture produce, which is again covered here. Cross country pipeline for distribution, which is covered here. One more iron ore factory would be also here. Okay, next is building of 2-star plus hotels is covered here. 2-star and above, both are allowed. Okay, building and operating hospital with minimum 100 bed is also covered here. Developing and building a housing project for slum redevelopment, slum is covered here. Fertilizer factory was covered under further. Inland container depot is something you have to remember separately. This all thing talks about nothing but the infrastructure. So infrastructure development is one of the thing. Beekeeping is one of the thing. Sugar warehousing specifically for sugar. Say sugar, they have separated said because sugar is not agriculture produce. It is further processed. Land or iron ore, setting up semiconductor wafer factory and developing infrastructure. So see, this 14 business are covered. So all this business plus infrastructure and fabrication unit, this two, your all businesses will be covered in this story. Yes. So please try to remember this 14 businesses. What will happen in this 14 businesses? Whatever amount you invest, you will get deduction in the first year itself, 100% deduction. No need to wait and capitalize them and claim depreciation. Just go through with the list once. You do not require to remember this years, guys. It's very difficult for you. Just remember the name and the percentage. Percentage are same for everyone. So just remember the name of all the businesses. Ask me if you have any queries. Try to finish maximum things in the class. When I'm saying read it, so you just keep your books with you. You read it all together in the same time itself. That would be very much helpful for you guys. So this all businesses should be newly set up. There should be no split up of the business. The assets which are purchased in this business shall be used for 8 years in this businesses only. Okay. Further, this all businesses should be operated by their own owners. Only hotel business can be given someone else to run it. No problem in that particular case. And whatever plant and machinery you are purchasing, they should be new only. But here new, how they define new is in this way: old imported second hand machinery will be fine, no problem, you'll get a deduction. Out of total 20% of your plant and machinery can be second hand as well. So new जो खरीदोगे तो वो new ही रहेगा. If you import from somewhere second hand machinery, even that is eligible. Further, if you have 20% of your total machinery as second hand plant and machinery, even that is eligible. So if you invest into any of this business, you'll get 100% deduction in the first year itself. If you invest anywhere by paying more than 10,000 in cash, that is not allowed. Okay. If you are building cross country pipeline, please let other guys also use this pipeline. Do solve this Suraj wala question. It's very interesting and good question, which gives you a highlight about the hotel thing, how hotel profits and this will be deducted. Okay. Next thing, if you pay any insurance premium for stock in trade, fully allowed. Health insurance premium for employees, fully allowed. Bonus or commission to employees, again allowed only if it is paid. Okay, that's what again we'll see in section 43, which says that certain deduction allowed on only payment basis. Okay. Further, interest we have already seen. If there is a Z coupon bond, zero coupon bond. Now what happens with zero coupon bond? Pay attention. Zero coupon bonds are certain bonds on which you do not require to pay interest annually or periodically. Here the owner or the investor gets the return in the price of the bond itself. For example, if I issue a bond at 90 and I redeem it at 110, so in the price of bond itself, the person earns 20 rupees, right? So now if I'm a issuing authority who is issuing this bond, what is the cost for me for this bond? The cost for me is 20 rupees. So this 20 rupees will be divided into the period of the bond in which it was exist. So if it is for 2 years, this 20 rupees will be 10 each year. If it is for 3 years, it will be accordingly for each year. If it is for 5 months in this year and the 5 months in next coming month, so proportionate. In short, how many days were there it is in your period, you will take only proportionate discount there. Okay. Now further, another interesting thing with the point of view of the employer. So with the point of view of employee, we have already seen how much is your provident fund, recognized provident fund, statutory provident fund is exempt. In the points of your employer, when employer also gives a contribution, so if employer gives a contribution for statutory provident fund, recognized provident fund, approved superannuation fund, approved gratuity fund, so see all good names. These are all allowed. If we use unrecognized provident fund, unapproved superannuation fund, unapproved gratuity fund, not allowed. Just go through this. This can be one-liner adjustment into a PGPP question. Very simple. If this approved, recognized है, तो allowed है. नहीं है तो not allowed है, add that back to the profit. Further, employer's contribution towards pension scheme under section 80 CCD is also allowed of actual contribution of 10% of basic plus DA in terms wala salary. Okay, next is your animals used in business other than stock in trade. So now what happens? Animals are your livestock, and livestock are not included into your plant and machinery or any of your depreciable assets. So what do you do with that? So when you purchase them, you just capitalize them, and whenever they become permanently useless or they death occurs to them, so the complete amount will debit it to the P&L. So for example, say if I purchase some buffaloes for milk purpose, I purchase say one buffalo for 10,000. So right now I will capitalize them. No depreciation has to be charged yearly. Say after 5 years it died. So all 10,000 will be debited to the P&L. But say when it died, I have sold its carcass for 500 rupees. So debited would be only 9,500, the net amount. Okay. So this is how you will treat your livestock. It can be hen, it can be cow, it can be buffalo, horse, whatever. So if they are either dead or they are not useful for the purpose what you have purchased them for anymore. For example, if you have purchased cow but she will not give milk anymore, that time you can depreciate it. You can directly put into the P&L, not depreciate it. Okay. If bad debts is there, so please remember first thing, provision for bad debt is not allowed as per income tax. So if it is done as per accounts, add it back to the profit. No provision is allowed in income tax. Okay. Further, if there are actual bad debts, then yes, definitely you can take the deduction into your P&L. But if it is a loan वाला bad debt, सेल से bad debt हुआ तो it's fine. लोन का bad debt और आपका business लोन देना नहीं है, आपने लोन दिया, it's your mistake. Further, it can also happen just like we have seen in the areas wala part, areas of rent. See what happened? Bad debts to me were 1 lakh. Okay, so I have debited to the P&L. Say in future that person come back and he given me 1 lakh. So bad debt recovered will be again fully taxable. It will be added back to the profits. So now in this case, but say I have debited bad debt by 1 lakh, but my assessing officer says that he will disallow 40,000, he will allow only 60,000 to be deducted. So in future, if this bad debt is recovered, पहले मैं disallowance की दुश्मनी निकालूंगा. So for example, that person came back to me after 3 years and he said that, sir, I will pay you 50,000. So in this case, first I will subtract the disallowed amount and the balance would be taxable. Everything clear? That is in the case of bad debts. And if the assessor disallows certain amount, again this can be one of the MCQ question. So whatever is disallowed in future, if the bad debt is recovered, please remember पहले हम दुश्मनी निकालेंगे AO से, assessing officer ने जितना disallow किया पहले माइनस कर देंगे जितना भी recover हुआ है, and the balance would be taxable. Everyone clear? Just go through with this example. Done? Okay. Next, expenses on family planning. So if a corporate company, Indian company does expenditure on family planning, revenue expenditure 100% allowed, capital expenditure allowed in 5 equal installment. STT CTT paid on sale and purchase of your shares, and that is your business. In that case, this is allowed in PGBP. So you remember, if it is your capital asset, it was disallowed in your capital gains. But if it is your PGBP, it's your business, then this sale and transfer and the security transaction tax and this tax are allowed as an expenditure here. Okay. Thereafter, CSR expenditure, the CSR which you do as per section 35 of your Companies Act, even though you do with the Companies Act, but for income tax purpose, it is not allowed. Okay, but if it is some of specified nature, only that specified nature which will be known to you in a question, that will be only allowed. Other than that, no CSR expenditure is allowed. Okay. Further, allowability of following expenditure: advertisement in the brochure of newspaper pamphlet of political party is not allowed. So if you do any advertisement in the brochure, generally do advertisement, whatever advertisement you have to do, it is allowed. But if you do in the brochure of any political party, that is not allowed. You will get a separate deduction in deduction chapter that we'll learn there. Gift to employees is fully allowed. You can pay how much ever gift you want to give them. But please remember, it will be added them to in their salary. Puja expenditure, customary expenditure allowed. Expenses incurred by CA for attending CPA seminars allowed. Dividend distribution tax not allowed. Okay, because dividend is appropriation of profit. And provision of loss, everything not allowed. Further, if you do any such expenditure from your capital get risen, like IPO, FPO, right shares, they are not allowed. Other than that, buyback, bonus, debenture of share, this expenditure are allowed. Okay. And interesting and very important part here, taxes. If you pay direct tax like income tax, not allowed. Indirect taxes are allowed. Interest upon any of this income tax, not income tax तो कोई भी केस में allowed ही नहीं है, it is direct tax. But indirect tax का interest allowed है, but penalty is not allowed, that is penal in nature. So see guys, if you are getting penalty in certain contract, that is allowed as expenditure, but penalty for the breach of law is not allowed. So if there is so income tax is anytime anyway not allowed to you. But if there is any interest on your indirect taxes, that is allowed, but penalty will be never allowed because it is a breach of law. Breach of contract penalty allowed as a debited to P&L, but breach of law penalty will be not allowed to you. Everything clear? Next is your any freebies by pharmaceutical companies is not allowed. Why not allowed, guys? Freebies. Now what happens many times, pharmaceutical company gives certain medicines or certain what do we say, certain perquisites to the doctors. They give them foreign trip, they give them certain gifts. So this, as per doctors ethics, are not allowed to be taken. That's why this is not allowed to pharmaceutical company to debit to their P&L. Interest on loan taken for payment of income tax also not allowed. Tax audit fees on litigation expenditure is allowed. Premium paid by firm for key man insurance policy is allowed. Further, this talks about the payment where TDS has not been done. Another very interesting part of this chapter, which says that when you do certain payments and if you don't do TDS, there will be disallowance attracted to you. So pay attention, first section is that when you do a payment to non-resident and TDS has not been deducted in the previous year or not been paid to government up to the date of return filing. So please pay attention, this is a very interesting case. So we are in the previous year 22-23, right? So there are two conditions in all of this TDS provisions. There are two conditions. One is that TDS should be deducted during the previous year. And condition number two, it should be paid before the return filing due date. So TDS should be deducted and it should be paid before return filing due date. These are the two conditions here. Okay. Once again, I'm repeating. Please remember always that TDS should be deducted. That's one condition. And TDS to be paid before return filing due date. That's another condition. And both has to be done. If you only pay TDS without deducting, not allowed. If you do not, if you deduct it but don't pay to the government, not allowed. Okay, everyone clear? So in first case, in the payment of non-resident, 100% disallowance is there. And if you don't pay before return filing due date, if you pay in some future date, it will be allowed in that respective previous year. Payment to resident. In this case, again TDS not deducted or not paid to government up to return filing due date, 30% shall be. Wait a minute, what happened? What is given here? Yeah, 30% of the sum shall be disallowed to you. Okay, so in case of non-resident, 100% will be disallowance. In case of resident, if you haven't deducted or haven't paid the tax during the time, the disallowance would be only 30%. So in future, if you pay this TDS back, the balance 70% will be allowed to you. And this is the another interesting section, which is your section 40 IA 48.3, which says if you forget to do TDS for salary payable outside India or a non-resident salary, okay, specifically salary they have said, and TDS not deducted, 100% disallowance will be there in future as well. Never ever it will be allowed. So here there are these three sections. One, payment to non-resident disallowance is 100%. Another, payment to resident disallowance is 30%. But in this both cases, in future if you pay, the disallowed amount will be allowed to you. But in the case of non-resident salary or salary paid outside India, if you don't do TDS, 100% disallowed और future में भी कभी allowed नहीं होगा. क्यों? क्योंकि they know the person who takes salary and go outside India, he will never come back to India to pay taxes. So they give you 100% disallowance. Everything clear? So, and for all these three sections, TDS need to be deducted and paid before return filing due date. Okay. Also remember, TDS अगर आपने इसके बाद डिडक्ट किया तो भी नहीं चलेगा. It should be done before in the financial year only. Yes, everyone clear with all these rules for TDS? Any questions, any queries so far, guys? Everything going good? Just 15 more minutes and we'll be completing the chapter. Okay. Now the next part of here is your this very important part, because always from this part a question comes into your PGPP. What this part says, that whenever you do a payment to your relative which is unnecessary, extra payment, so this extra unnecessary payment would be disallowed to you. Who are your relatives? For an individual, the relative will be spouse, mother, father, brother, sister, and linear ascendant and linear descendant. For HUF, their member and their relative. For firm, partner and their relative, directors and their relative, for company and AOPBI member and their relative. So if you pay to any of them, any excess amount, this will be disallowed under section 40A2. I will suggest please remember this because it is much super hit question which is generally asked in PGBP. So A2, 2 means relative, 2% होने चाहिए ना, so like that you can remember. Okay. Next, also if you pay them substantial interest, extra interest, whatever it would be there, that is also disallowed. Holding to subsidiary and subsidiary to holding are also known as relative, and even having substantial interest is also an relative. Okay, and if you pay them above more than necessary, this will be disallowed. Further, another important provision 40A3, the next one, which says that if you pay single person in a single day for a single transaction more than 10,000, fully disallowed in cash. So can I pay to 1,000 different person 10,000 cash? Yes. But to a single person in a single day, not more than 10,000. Can I pay single person 365 days every day 10,000 cash? Yes, I can. But again, not single person in a single day 10,000 more than 10,000 in cash. Are you understanding? So single person in a single day, we can give him multiple days, chalega. Multiple persons, chalega. But single person, single day, about 10,000, nahi chalega. If it is there, then please debit it to the P&L, please add it back to the profit. If the person is transporter, then the limit is 35,000. Okay. Further, in this case, if you pay more than 10,000 also cash, it is allowed. To whom? To RBI, LIC. You pay to banks, so you can do NEFT, RTGS. You just pass a book entry. There is no actual cash payment. There is payment for agriculture produce. Another important point. If you are paying for agriculture produce or livestock or poultry farming, in that case, even if it is about 10,000 and you are paying in cash, it is allowed. Further, retirement benefit up to 50,000 allowed. Payment of salary employee posted for 15 days or more rural area allowed. Payment where no banking facility are not available, not allowed. Bank holiday पहले allowed था, अभी not allowed है. Even if you pay more than 10,000 on a bank holiday, it is not allowed. Payment is made by an authorized dealer or money exchanger, in that case allowed. So these are some of the exceptions to your rule, section 43 mentioned in rule 6DD. Just go through these exceptions. Other than that, if you pay single person single day more than 10,000, it is fully disallowed. Yes, done everyone? Okay. Next, section 43B, which says that certain expenditure are allowed only on payment basis. Just a second. Certain assets, certain payments are allowed only on payment basis, not on accrual basis. Why it is like this? Because government want to make assure that you pay this. Now the payment has to be done. See here, if it is 22, 23, the payment has to be done return before return filing due date. If you pay it before return filing due date, this will be allowed, or else it will be disallowed. And in future, whenever you will pay it, it will be allowed in that respective previous year. So which are these 7 payments? So see, pay attention here. Any tax or duty or cess, any tax, it can be GST, it can be your income tax, it can be your custom duty, any tax, duty or cess has to be paid before return filing due date for the allowance, or else it will be 100% disallowed, allowed in future when you actually pay it. Next, employer's contribution on statutory provident fund, recognized provident fund, approved gratuity, वो सारे अच्छे जो fund थे ना जो allowed थे. If employer do this contribution before return filing due date, then and then only allowed or not allowed. Further, bonus or commission to employees, that is also allowed on the paid basis only. And if you remember, in the salary income, it is allowed on only receivable basis. Next, interest on loan to any public financial institution, financial corporation, state industrial investment corporation. So if you paid them any interest, this interest is allowed, again not on accrued but on payment basis only. Further, leave encashment. So you can remember, guys, 3 things are for employee. Okay, 3 things are for employee. One is your employer's contribution to recognized provident fund, statutory provident fund, and so on. Bonus, commission, another is leave encashment, right? 2 are for government. How government? One is your any tax, duty, cess, another is your railway ka payment, and 2 are for banks. One is for interest, and for banks and interest on NBFCs. Okay, so you can simply remember this 8 payments. 2 for government, tax, duty, cess, and railway use of railway assets ka payment. 3 for employees, that is bonus, leave encashment, and your RPF, SPF, whatever it is there. And 2 for your banks. One is for NBFC and another is for your public financial institution for their interest payment. Just go through this one. Try to remember this. Again, very important thing. So what happens in the PGP question? These are 1, 1, 2, 2 marks adjustments. So you keep on doing this 1, 1, 2, 2 marks. You keep on getting this 1, 1, 2, 2 marks easily. So this all expenditure has to be paid before return fund due date, then and then only it will be allowed or it will be disallowed. Everyone clear? Any queries so far? Now the last part of this chapter is remaining about presumptive income. We'll do that, and that PGPP is also done. Any queries, guys? Okay. Let's go to the last part, guys, now. It is your presumptive income. Okay, just a minute. Let me see. I have one chart made of this. Just give a minute to me, guys. I have a very beautiful chart made of this. Yeah, it is there. Okay. Now, see, guys, remember. Now, here we are going into the section of presumptive incomes. Now, here there are five sections to deal with the complete 44 AA series. 44 AA talks about the books we need to maintain. 44 AB talks about AB, AD, ADA, and AE talks about the presumptive income. So, first, let's talk about the books we need to maintain here. So, see, if the person is specified person, if the person is specified person, who are the specified person? Accountants, CS, engineers, film artist, interiors, technical consultant, these all are the notified person. So if these guys in all the previous last 3 years, in all the 3 years, if they're having the gross receipt more than 1,50,000 rupees, in that case they need to maintain books as per rule 6F, or else they do not need to maintain any books. Again, I'm saying, or this specified person, I will simply say professionals, if they have the gross receipts in last all the 3 years, you can see in the example, all the 3 years, if the income gross receipt are more than 1,50,000, in that case they have to maintain books as per rule 6F. Which books they need to maintain? So cash book, journal, ledger, carbon copy of all bill above 60, duplicate copy of all invoices above 50. Okay, and in case of doctor, a daily case register has to be maintained. So they have to see the gross receipt of all last 3 years for this specified person. If a person is non-specified, any other SSE, in that case, if he is individual HUF, you will see if his income is about 2.5 lakh, that is basic exemption, or his turnover is about 25 lakhs, then he need to maintain books, or else no books has to be maintained. And any other person other than your individual or HUF, last 3 years, any 1 year, if his income is above 1.2 lakhs or turnover is about 10 lakhs, he has to maintain books or no need of maintenance of books. So this 44A talks about the maintenance of books. Who need to maintain and who do not need to maintain. Okay, so for specified all the 3 years 1,50,000 is limited. For other SSEs, for individual HUF, the limit is 2.5 lakh or 25 lakhs, and other SSEs is the limit is 1.2 lakh or 10 lakhs. Just take the screenshot of this, guys. This would be very much helpful for you. Section 44AA. Ask me if you have any queries, guys. Please do ask me. Done? Okay. Let's go to the next section. Next section is 44AB. So that we can take normally now. Wait a minute. Where was our... Yeah. Okay. So that was done for your books. Now next section is your 44AB. Compulsory audit of accounts. Now 44AB says that whoever business have a turnover of more than 1 crore or gross receipts of more than 50 lakhs need to audit its books of account by chartered accountant. Business turnover of 1 crore, professionals of 50 lakhs, income 50 lakhs. Audit can be done by CA, report has to be done by 30th September, and if not done, penalty is 1,50,000 or 0.5% of turnover, whichever is lower. So if your turnover is above 1 crore and your or professional turnover is above 50 lakhs, audit has to be compulsory done by chartered accountant. Further, presumptive taxation. Okay. Now here further, you can come to 44 AD for businesses if your turnover is less than 2 crore in the financial year. Okay. And you are not in any agency or commission businesses. So in this case, whatever is your turnover will directly multiply by 8% and will take this as your profit. Further, if your turnover is in direct bank account, will take only 6% and they will take this as your profit. No need to maintain any books of account, anything. You have to just prove your turnover, that's it. And direct 8% or 6% of your turnover will be taken as profit. For bank, whatever turnover in done, bank done 6%, and whatever turnover done in the, what we say, cash, 8% of the profit. For businesses, then professional also one rule came, 44 ADA, for turnover limit less than 50 lakhs. But this guys, whatever are the gross receipt multiplied by direct 50% will be their profit. Why 50% so huge, sir? Because they do not need to purchase anything. There is no trading happening. There is a service industry, right? You have to remember that once you have opted for 44 AD, for next 5 years you have to opt for 44 AD. And if any one of this year you go out from 44 AD, 44 AD की गली से आप बाहर जाते हो वापस, तो वापस अगले 5 साल तक आप 44 AD में नहीं आ सकते हो. This is the only rule here. Okay, and remember the turnover limit. Turnover for business is 2 crore and turnover for 44 AD is 50 lakhs. Now there is one problem. 44 AB audit section says that if you have, now see I will say here, it says that if you have a turnover above 1 crore, the books need to be audited. But 44 AD says that if you have turnover less than 2 crore, you do not need to do audits. You do not even need to maintain books of account. Just maintain your turnover books. तो सर ये तो गड़बड़ हो रहा है ना. एक सेक्शन बोल रहा है 1 करोड़ के ऊपर बुक्स मेंटेन करना है, ऑडिट भी करना है. एक सेक्शन बोल रहा है 2 करोड़ के नीचे आपको ऑडिट करने की जरूरत नहीं है. सो दिस इज लाइक, if you, this is an optional section. If you opt for this, then you do not need to do audit, even if your turnover is more than 1 crore. But if you don't opt for this, so you have to compulsorily do audit if your turnover is more than 1 crore. This is a tricky thing here which you need to understand. Everyone clear? I will just repeat once. If my turnover is less than 2 crore and I am opting for 44 AD, no worries, I do not need to do audit. But if my turnover is less than 2 crore, more than 1 crore, and I am not opting for 44 AD, the audit has to be done. But if you are opting for presumed income, this is compulsory profit you need to show. If you feel your profit is less, no problem, audit your books of account and file your income whichever you feel correct. Everyone clear? Yes. And the last section is 44 AE, which is for transporters. So transporters, you will divide their vehicles in heavy goods vehicle or other vehicle. Heavy good vehicle are the vehicle who have capacity of more than 1000 ton. Okay, and the rest of vehicle are 7500. So for heavy goods vehicle, you will take a prism to sorry, yeah, just a minute, huh? Sorry. This is 1000 per ton. It is, sorry. Heavy goods vehicle and light good vehicle we divided on the kg of 12,000 ton. If it is 12,000 or above, it's heavy good vehicle. If below, it is light good vehicle. So in heavy good vehicle, the income would be, presumed to income would be rupees 1000 per ton per month. And for light good vehicle, it will be flat 7500 per month. And it is on the ownership. If you own anytime during a year more than 10 vehicle, you can't come here. So these are all section meant for small businesses. If you own less than 10 vehicles, you do not need to maintain all books of account. Simple, see how many vehicle you own. It is not necessary you put to use or not put to use. If you own the vehicle even for 1 day in a month, it will consider complete month. Okay, so for light good vehicle, the presumed income would be 7500 per month per vehicle, and heavy good vehicle, it would be 1000 per ton per month. So if it is 20 ton vehicle, so 20,000 per month would be your presumptive income. You do the total of the year, that will become your total income. It is a section 144 AE only for transporter. Again, it is optional. Okay. So upon depending upon this, there is one question given in study material. Do practice this. This complete concept would be cleared for you. Okay. Further, at the last part of this chapter is about your book profit. How much salary you can, how much salary or interest or bonus or commission you can pay to your partner. So please remember, for first 3 lakhs, just a second now, it's salary, I will not, yeah, how much remuneration, salary you can pay, remuneration you can pay to your partner. For the first 3 lakhs, you can pay 90% of the book profit or 1,50,000, whichever you feel correct. For the balance book profit, you will calculate 60%. What is book profit? Book profit is a profit after depreciation before tax. Okay, so see, book profit is after depreciation before remuneration. So on this book profit for first 3 lakhs, you can pay 90% or 1.5 lakh, whichever is higher. Balance you can pay 60%. So total. So for example, if a company has a book profit of 5 lakhs, for first 3 lakh, it can pay 90%. That is coming how much? 2,70,000. And balance 2 lakh, it can pay only 60%. Right? That is 1 lakh 80, not 1 lakh 80,000. 60%. 1 lakh 20,000. So total remuneration, how much you can pay to all partners? Only 3 lakh 90,000. If you pay above this, it will be disallowed. Below this, it is allowed. So this is a limit. How much maximum remuneration you can pay to your partners? Okay, 30% on the first, 90% on the first 3 lakhs, and the balance 60%. Further, the interest payment to the partner's capital can be maximum 12% per annum simple interest. If you pay above this, it is fully taxable. But one more condition is there. Say it is a partnership firm. I am partner into this in individual capacity. How much interest I can get? Only 12% per annum simple interest. It is giving interest to Sumeet HUF as well. So who is partner in the business? Sumeet. Individual is separate. HUF is separate. इनको 50% भी interest देना है, दे सकते हो. So it is just said that in which capacity you are partner. In that capacity only the interest limit is there. If you are paying interest to any other capacity, there is no limitation for the interest. Similarly, say in a partnership firm, Sumeet HUF is a partner. So limitation of interest is only to Sumeet HUF. They can pay unlimited interest to Sumeet individual. Understanding everyone? So this is a small part of your business's profits, and remuneration can be paid to your partners, not about, yes. Let me know if you guys have any queries, guys. Here we finish PGBP. I have tried to cover maximum provisions of your PGBP in this revision. Let me know if you have any queries, or else yes, we'll see you back at sharp 11 and we will continue with our balance chapter, that is income from other source and other chapters. Yes, everyone, is it clear? Hopefully it was great. We'll meet back at 11. Let me know if there is any queries. I'm waiting for your queries, or else tata bye bye, have your breakfast and we'll see back at 11. Done everyone? No queries?